Hello, this is Dr. Janice Cito, and I'm the instructor for this course in Grade 12 Accounting. It's code BAT4M, and here we are in beautiful, sunny, but smoggy Subang Jaya here in Malaysia. It's the Canadian Pre-University program at Taylor's College. We are now starting Chapter 3, and Chapter 3 is called Updating the Accounts. And as you recall in Chapter 2, what we did was we learned how to record transactions. First of all, we put them into the general journal, and then we post them into what we call T accounts. And that's the first and the easiest way to record transactions into different accounts. And then what we finished at the end of a certain period of time, whether it was the month or the year, was then we recorded it into what they call the trial balance. So after the trial balance, now we're going to do Chapter 3, which is called Updating the Account. Chapter 3 is long. And as you can see, here it is. Here's the chapter in the book, and it's our book is the book by Harrison and Horngreen. And Chapter 3, we're going to be looking at page 170 because I think it makes a lot of sense if we look at the case, a complete case from beginning to end. We're going to be needing to use the general journals. You've got a handout on that. If not, you can also take this one. I've got an Excel spreadsheet, and if you look into the worksheet area, you'll find plenty of worksheets. We're also going to be using the T accounts. So this video is only about 15 minutes, and we're using a lot of time already with the introduction, so let's go and take a look at what is required in this end of chapter summary problem. And as you can see on page 170, we are given a this problem to look at. And it says here that we have a trial balance below, and we have to adjust it. And let me just see if I can pull it up. Let's see, there it is. There it is. Oh, it's running away. The mouse is running fast. Well, anyways, if you could turn to page 170, you'll see that there is a case. And in that case, what they've given you is the trial balance. And what we have to do once we get the trial balance is we have to make adjustments. So first of all, why don't you do this? Take the trial balance sheet, which I'm trying to get loaded here. Here we are. Take these trial balance accounts, and then let's go back a step, and let's reconstruct the T accounts. So do that, and then you can join us again. I hope you've joined us again after you've had a chance to do the T accounts. So as you can see, what I've simply done is taken the amounts. For example, this is cash, 198,000, and then I've just plopped them into the T account over here. So we've got cash and all the other accounts, receivables, etc., etc., etc. So that's what I suggest you do, and make sure that this is what you get. Then, after you've done that, we are going to go back and see what it says here in the book. Okay, I'm trying to get it to work. There we are. A little bit too fast, a bit too far. And here we are. So it says, open the ledger accounts with the unadjusted balance. Show the dollar amounts. And so what I've done is I've shown all the T accounts. And I like putting it in thousands, so that's why mine says the amount with 3 zeros at the end. And then what we do is we journalize the adjusting entries for Goldsmith Company at the end of this year, which is December 31st, 2006. And we're going to put in the entries, by letter. So we've got 6 entries that we have to put in. And basically what it is, when you have the trial balance here, is the trial balance balances, absolutely it does balance, but is this actually what is in reality what's going on? So for example, let me go back to page 170. I'm afraid that the mouse is running around for me, but anyways, what we see here is it gives you several things that happen. So for the first thing is they've decided when they did an actual count of the supplies, there was only 2,000 in, there was only 2,000 in supplies left. And according to your trial balance, there were 6,000. So what we have to do is we have to update all these accounts to what's real. So we know that if you've only got 2,000 left and you started off with 6,000, obviously you used 4,000 in supplies. So what you use in supplies is an expense. So in the T, where'd that T go? In the T accounts, that's why we have the supplies. And I'm afraid this is getting a little bit, it's running away from me again. We have supplies, there we are. So the supplies start out with 6,000 on the debit side, we credited 4,000. And so we do that, that's for entry A. Let's go back to the general journal. Entry B, what they found out was the furniture and fixtures is not as, it's gone down in value. Think of a car that goes down in value. Think of your iPhone 5. It's gone down in value because it came out then with the iPhone 5S, and then the iPhone 6, and then pretty soon, well, as they announced on the Apple conference the other day, now there's going to be the iPhone 6S. So therefore, things do fall in value. So the second expense, B, was there was an accumulation, there was a depreciation of the furniture and fixtures of 20,000, and that's a credit. And so the accumulated expense, remember all expenses are, when you look at it, expenses are affect equity, and there's debit and credit. So anything that adds to equity on which is the credit side, is like your net income or your services earned or your products sold. Then anything that's an expense is going to be on the debit side. Remember, I just thought, well, I thought of, DC, diarrhea and constipation. Diarrhea, you let it go. It decreases the value. That's debit. Credit, constipation is what you retain and you hold in. So you've got this debit expense that you're recording here. Number C is there was an accumulation of depreciation on the building. So this was furniture and this was on the building. So you record that also under the debit and credit. This is a debit expense. Okay, so if you look under the T, I wonder if I've got it here. So there it is, the accumulated depreciation of furniture and fixtures, and then accumulated depreciation on the building. And then there's that supply expense that I was talking to you about. So then we have, which is D, salaries. You owe people salaries, you just haven't paid them yet. Here in Malaysia, we pay people at the end of the month. For example, today I think it's the 11th. So you owe people some money. You haven't paid it yet because it's not the end of the month. So, but you owe them. So you might as well record that expense under the debit account, and then also you've incurred a liability, which is the salaries payable. And let's see if I've got here somewhere the salaries payable. There's that 5,000. We do those for the other accounts as well. The other transactions. So then we've got here. There was you performed this goldsmith company performed a service, 12,000, and these people did not pay them yet. They haven't paid them, but they have a bill. So you bill them, and accounts receivable is gone up by 12,000. So you recorded accrued revenue. Got just a couple more. This one is service revenue. So again, just like here, you performed a service. Here, however, here's your service revenue, and they haven't paid you yet. This one, basically, is you've earned the service, you've gotten money for the service, but you haven't earned it yet. And just think of it like a wedding planner. A wedding planner usually charges a big deposit up front, and then the wedding hasn't happened, but they have been paid a bit up front. So that's what they call unearned service revenue, and that's debit, and then service revenue here is a credit. Now let's look at the last one. The last one is we owe taxes. And here it is, taxes payable. We haven't paid it yet, so that's a liability. We've incurred the expense, which we have to pay, and that's $35,000. And so there is. That's that first part in which you chart, first of all, the T accounts, and then you put in the entries for the general journal. Then afterwards, it asks you to please put together a adjusted trial balance. So taking in all these different updates. So what I've done is, like, it's actually in your textbook, but I've in class we put it together. We used Excel, and so here we are. We've got them perfectly balanced. Assets equals liability plus equity. We had some problems in class because people did not pull in the right amounts, but we managed to find out where people went wrong, and then therefore it happened. It was fine. Then the book asks you to prepare the income statement and also a balance sheet. So remember, this is the adjusted trial balance. So now we're going to prepare those 4 financial statements. Now this video is going to run out of time, so I'll show you at least the income statement. Right, I can get this to show up. There we are. So what we've done to generate the income statement is we have taken this part of the adjusted trial balance, and we basically shifted these figures over to the income statement. Remember, with income statement, you have your service revenue first, or any revenue. Then you subtract your cost of goods sold and your expenses, and there you have it. Now I've actually put in a space. I'll have to get rid of this space, but I don't have time to get rid of it while I'm talking to you here. But let's pretend that space does not exist. And therefore, you got all your expenses. There you are. And so your net income before taxes is that amount, which is $106,000. And there's the income tax expense over here. Remember, the income tax expense, you pay that after you calculate your net income before taxes. Then you subtract that, and then you get your net income. So what I've done is I've gone through this rather quickly, but this is just to give you an idea of where we're going next. So starting next week, what we'll be doing is we'll continue this case, and we'll take the income statement which we've got here, and then what we're going to be doing is we're going to prepare the changes in equity and the balance sheet, etc. And then we're going to be closing some temporary accounts. So please bring your textbook and your pencils and your calculators, and come join me in the Mac lab. Have a great weekend. Bye-bye.